Hello, too. Today is Thursday, March 29th, and new stock came on my radar just yesterday, and I entered a new trade. The company stock symbol is NUE, New Core Corporation, and it's in the steel sector. As you know, the steel sector has been in the news quite a bit as far as Donald Trump's tariff talks. Now, what I have noticed is NUE has recently completed a double bottom, and that's one of the big chart patterns that you'll be learning in over the next few weeks. I'll be going over various chart patterns. The double bottom is a very bullish pattern because once the second bottom is put in, usually you will have a retracement all the way up to the top, usually about the area where the left shoulder of that where the pattern started, and actually that double bottom will actually turn into a W looking formation. The most recent bottom started around $60 and it looks like it top out around 70. So that's a 10-point move. You can make a lot of money with options with a 10-point move. So basically, instead of just buying a call like I've done in the past, I've elected to put on a more complex trade called the butterfly. A regular call option is just a one-leg trade, whereas a butterfly is a three-legged trade. Usually, the terminology butterfly comes from the fact that you look at the price target, and like I said, we're looking at $70. You'll sell two contracts at what's called the body of the butterfly at $70, and then you'll sell one contract each on both sides of that body, which they use the term the wing of the butterfly. So in this case, I'll do 5 points either side of that the body of the butterfly. So it'll be a 65. I'll buy a wing at 65, and I will buy another wing at 75. So this is called the 65, 70, 75 butterfly because each leg of the trade is 5 points apart. Ideally, ideally how the butterfly is drawn is using a triangle pattern where the wings of the butterfly are considered the net. So you're constructing, in a sense, a butterfly net, and you want the price of the stock to rise up to within the wings of the butterfly, which forms the net. And maximum profit is achieved right at the apex of this triangle here. But as long as once the price starts rising up into this net here, passing the lowest strike, the 65 call in this case, you'll start making me a lot of money. Now, the one thing about the butterflies, you don't start making serious money until the very last week of the trade. And like I said, maximum profit is only achieved at the peak. So and at expiration, so actually the stop price has to stop exactly at $70 on the very last day of the trade for you to make maximum profit. Now, I will show you what's called my risk graph for this trade. And as you can see, the current price of NUE today, I got it on it yesterday at that low, and the construction of the butterfly, as you see, you got this peak, the apex of the triangle. That's where you will receive maximum profit. And as you can see, there'll be a pop-up window here. If on the very last day right at $70, the peak price profit would be 13,000, about 13,436. But like I said, it has to stop right at $70 even, right on the exact last day of the trade. I think it's more realistic for the stock. Here's a profit area to reach about $10,000, which, as you can see, is about 1/4 the top of that triangle here. But I'm going to put in a trade that kicked me out at about $8,000, and $8,000 is quite a bit of money because I only risk about $1,000 in this trade. So risking $1,000 to make $8,000 is an 8-to-1 ratio, and that's very good. This was a 23-day trade. I got in on the 28th, so now it's 22 days. So it's about 3 weeks left. These color lines show the days to expiration of the trade, and the green line is 8 days before the trade expires. So like I said, the bulk of the value of this butterfly is made in the last week. And if I was to get out on that time and the price was at $70, I would have made $6,500 in this trade. But again, the program here outlines the wings of the butterfly using these light blue lines. You got the upper wing and then the lower wing, which they call the net of the butterfly trap. So once the price goes up in here, in this area, I'll start making maximum profit. This dark blue line is the current price of the stock. So as time goes by and the price goes up, this blue line will start raising up into the butterfly net. So this is the butterfly. It's a 3-legged trade. Here are the elements of the legs of the trade. I bought the 65 call, the 70 call, sold the 70 call, and bought the 75. So it's in a 1-by-2 ratio. You buy the wings once and sell the body twice. And as long as you maintain that 2-to-1 ratio, you can buy as many contracts as you want. So for the wings, I bought 29 contracts times 2. I sold 58 of the body. So we will see how this trade develops. I will keep you up to date, and hopefully when I exit the trade, you'll hear this, and that will tell you that I hit my $8,000 profit. I'll keep you informed.